All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday, everybody. Today is August 1st, 2025, and happy Jobs Day, everybody. We got the jobs report. Man, it's a lot of days. It's the first day of August. It's Jobs Day. It's Liberation Day 2.0. Wow, top story this morning. Where do we start with this jobs report? Well, let me just summarize it, guys. We're going to summarize it real quick here. It sucked. If there's one thing you take away from this stream this morning, it's that jobs report sucked. It was really bad. All right, let's talk numbers. 73,000 jobs added for the month of July. That's a miss. Market was expecting 110. You know what? We could stop reading there and it would just be a lackluster jobs report. But you guys know me. I got to keep reading. It's just how I roll. And man, it just gets worse and worse from there. The big thing, holy downward revisions, Batman. And downward revisions doesn't even do it justice. They just wiped out the previous months. May's jobs report has been downwardly revised from 125,000 jobs added. I'm sorry, it was downwardly revised by 125,000 jobs from 144,000 added to just 19,000 added. That's not a rounding error, guys. That means you overreported by what? A factor of 10? June's jobs report downwardly revised by 133,000 from 147 previously reported to just 14,000 previously reported. Do you guys remember last month when I was looking at the jobs report and I was like, wow, guys, this is actually pretty good. This is a pretty good jobs number. I was not expecting this. Well, maybe the reason I wasn't expecting it is because it never happened. It wasn't real. Combined 258,000 downward revisions to the prior 2 months. But hey, we added those 73,000 jobs, so we got that going for us. I'm sure they won't be downwardly revised into oblivion in subsequent months, right? Yikes. This is really bad, guys. The stagflation, it's here. All right. Economic growth, kind of lackluster. You had a plus 3% GDP reported earlier this week. That was just imports dropping off a cliff because of the tariffs. I think when all is said and done here, guys, we're heading toward the stag and deflation. Jay Powell's got a little bit of egg on his face this morning. I still don't think he should have cut rates, but the market sure thinks he should have cut rates. And certainly President Trump thought he should have cut rates. President Trump was out lambasting Powell on Truth Social this morning. Fed governors Waller and Bowman were out releasing their statements on why they thought the Fed should have cut. It seems people got an early look at those jobs reports and they were trying to get out in front of it with their messaging. Blame the Fed, not me. Look, guys, inflation's still above 2%. Inflation's still high. It's trending in the wrong direction. Cutting rates ain't the right thing to do here, but it's hard to look at the other side of the dual mandate, the employment situation, and say things are going well over there. It's almost like they never should have printed trillions of dollars to artificially juice the economy to begin with. Gee, who could have seen that coming? Some other stats about the health of the job market here. We had what sectors added jobs? Healthcare added 55,000 jobs. Not exactly a sign of prosperity, guys. Jobs added in healthcare, that's just a function of the aging demographics in this country. Old people go to the doctor more. You need more doctors. You need more nurses. Also, because of our healthcare system, you also have to add 15 freaking hominis administratum office workers for every actual care provider that you offer. That's just the way we operate here. Thank you, United Health, for nothing. Okay, so 55,000 jobs added in healthcare. Social assistance added 18,000 jobs. That's family services. Again, not a sign of prosperity. The only sectors that are adding jobs is people getting sick and dying and families falling apart. So, yeah, ride that rocket, guys. There's not a lot to like in this jobs report. The one thing I did like in the jobs report, federal government jobs did decline. 12,000 federal government jobs went away for the month of July. That's actually down 84,000 from its peak in February. That's about it, guys. Now, we'll look at the full-time and the part-time jobs like we always do to find out where the jobs are. And again, not very good looking there. Jobs data, just not good. All right, that's the one thing the economy's or the market really not liking this morning. By the way, Fed rate cuts back on the menu, boys. The odds of a Fed rate cut are rising dramatically right now off of this jobs report. We've also got a lot of tariff news today. President Trump came out late yesterday with his new revised reciprocal tariffs. It's Liberation Day too. Most countries are ending up with 10% tariffs here. Some were higher. Notably, Canada yesterday had their tariffs raised from 25% to 35%. And at the same time, tariffs on Mexico were unchanged. Mexico, actually, Trump punted again, another 90-day reprieve before any new tariffs hit on Mexico. Apparently, they're playing nice in the sandbox, and we're still talking. So they get 90 extra days. Canada, for whatever reason, no, your tariffs are going up, as well as most tariffs across the world. Typically, what I found based on what he released yesterday, most countries saw their tariffs reduced from what they were initially on Liberation Day. That's the bond market getting what it wants. A few countries, I noticed tariffs went up. Notably, I saw Switzerland's tariffs went up pretty substantially. That one kind of jumped out at me. Maybe that's got something to do with the Swiss franc, which has been rallying against the dollar pretty substantially over the last few months since Liberation Day, and that Sell America trade. Maybe that's what the tariffs are targeting there. But the market was already down about 400 points, or at least the Dow was down about 400 points before the jobs report came out. That was largely due to the tariffs. Also driving markets lower this morning was Amazon's earnings yesterday. You could see it in those NASDAQ numbers. Now, on the surface, Amazon reported pretty good numbers. It was a beat on the top and bottom line. Revenue good, earnings up good. But Amazon Web Services, their cloud computing, that's where all their AI investments live. Revenue growth of just 17%. The market was expecting revenue growth of 20%. This is after rivals like Google and Microsoft reported revenue growth in excess of 30%. So Amazon is starting to lag behind its competitors in the AI trade. And also a little worrying, Amazon, it's the biggest player in cloud computing, AWS, by far bigger than the other players. Their margins are compressing in AWS. They were 32.9% operating margins, which is still pretty good, but down substantially from 39.5% last quarter. So you got growth is slowing. You got margins compressing. Free cash flow at Amazon down 66%. All right. I mean, again, the whole point is to make money. And you're like, yeah, AI is doing so well, and we have all this CapEx, but our money in the bank keeps going lower. Isn't the whole point money in the bank? Isn't that why we do this? I guess not. And look, the other thing that happened is when people were pressing Andy Jassy, the CEO, for more details on their earnings call, you know, he made his typical statement, I'm capacity constrained, right? Demand still exceeds supply in the AI space. We've heard that over and over again for years. But then he followed up with a very important sentence when he talked about how finding enough electricity is the biggest constraint. They're not constrained by how many chips they can buy or how many they can get. They're constrained by power. That echoes what Microsoft CEO Satya Nadella said late last year, early this year. Power is becoming the bigger problem for the AIs. And look, if power prices are going up, maybe that explains why those margins are starting to compress as well, because these GPUs gobble up a lot of power. And last week, we had the PJM capacity auction in the United States. That's Penn, Jersey, Maryland, the biggest grid operator in the country. Operates from Illinois to the mid-Atlantic states, all the way down to Northern Virginia, the data center capital of the world. The entire PJM grid capacity auction came in at the price maximum. And the price maximum was put in place because capacity prices increased 10x last year, and people threw a fit that their electric bills were going up. So they put price controls in place, and the whole market went right to the max. And by the way, price controls, they never work. Price controls inevitably lead to shortages. And if you got price controls and power, shortages of power, that falls in line with what Microsoft CEO said and now what Amazon CEO said. The AI mania has outbuilt the power grid. And guys, those new power plants are not going to get here in time. Big turbines, natural gas turbines, they're back ordered for years. If you pay for one now, you might get it by 2030. Large transformers, there's only a couple of places in the world that even make the things. They're back ordered by years. All these new magical power plants that are just going to spring up out of nowhere doesn't work that way. The AI mania has officially run out of power. We'll see if that eventually shows up in chip earnings, NVIDIA earnings. But the writing is on the wall. The days are numbered for this bubble, but it ain't bursting today. We also got Apple earnings beat on the top and bottom line. Very good for Apple. iPhone sales up 13%. That was unexpected. It seems most of that growth is coming from China, where the government has been rolling out the stimmy programs trying to spur consumption to halt the decline in their economy because of the collapse of their real estate market. That's translating into some pretty good numbers for Apple this morning. We got earnings from big oil this morning as well. A lot going on today. Exxon and Chevron both reported their earnings. They both beat on higher oil production. And the last one we're going to talk about today, the Figma IPO. Figma is a software company. They IPO'd yesterday, and yikes, up 250% on IPO day. They actually halted the stock for volatility. It's up double digits again this morning. We'll talk about that IPO. This market just gobbles up IPOs all of a sudden. Guys, we have a lot to talk about this morning. It's going to be a very busy day, and it's only 9:14 in the morning. Why don't we shrink my big melon of a head and let's see what's going on in markets. Hey, don't forget that YouTube algo stuff, the like button, the subscribe button, all that good stuff. It really helps me out. And that way you can come back tomorrow and have your coffee with the melon heads, because we do this every single morning. Right now, the S&P is lower by 64 points, a full 1.02% in the red. We initially had a little bit of volatility after that jobs number here. It was about 8:30 a.m. Eastern time that hit. The market sold off a little bit, and then some people were like, no, buy my rate cuts. And then people were like, nope, rate cuts don't matter. The economy sucks, and the market started heading lower again. Meanwhile, the Dow is off by 396 points, 0.9% lower ahead of the open, and the NASDAQ is leading the way lower, off by 282 points or 1.22% lower. NASDAQ is feeling it a little bit more than the other indexes. I suspect that is due to those Amazon earnings and those AWS numbers. Meanwhile, take a look at the U.S. dollar in free fall right now. The dollar was up. We were back above 100 on the Dixie for the first time in quite a while. And then, of course, that jobs report came out and the dollar weakened dramatically against its peers. Why did that happen? That is the market saying the Federal Reserve is going to start easing soon. As soon as they saw those jobs numbers and those downward revisions to the prior months, they said, nope, sell the dollar, buy the euro, buy the yen, whatever. The Fed's going to lower. The Fed's going to start printing eventually. Dixie starts going lower. And the bond market started surging right away. Guys, we have your classic flight to safety going on in the bond market. People are selling stocks and they're buying bonds. All of this came right after the jobs report. Yields were actually higher initially off of that tariff news. It's also worth pointing out yields were higher, but they weren't dramatically higher. So the bond market was digesting this new tariff thing, whatever it is, pretty well, certainly better than it took it in April. And then, of course, the jobs number comes in and everybody's like, oh, my God, buy bonds. The job market sucks. 30-year Treasury, 4.832. That's off by 5 basis points and change. The 10 years at 4.255, down 10.5 points. Big move lower in the 10-year. The 2-year is off 17.5 points, down to 3.776. And the 1 month is actually up by 1 basis point, or by a little bit under a point, 4.372 for the 1 month. Although that is a slightly old data point there. I suspect when that opens up or when that refreshes, that'll be a little bit lower. Looking over at the commodities board, again, you can see the flight to safety happening in metals as well. Selling stocks, buying bonds, and buying gold. Spot gold finally getting a bid after a couple of days of losses. $3,353 for spot gold. That is up by $63 or almost 2% higher this morning. Spot silver getting in on the action as well. $37.07. That's up 36 cents or 0.96%. Silver needed that bid this morning. It was at one point down over $3 this week. But it's bouncing back a little bit here on this flight to safety. But you know what? I like the shiny either way. Copper's up 1.5%. Platinum is up 1.13%. Palladium up 2.84%. And WTI crude is actually a little bit higher, $69.53 for September WTI futures. That's up by about 27 points. By the way, we're expecting to hear from OPEC Plus this morning. They are expected to announce another production increase later this year. It's believed to be about another 500,000 barrels per day. This is largely expected, so that news may be moving oil markets a little bit here, but it's largely expected, so I don't think it's having that big of an effect. Now, Bitcoin is pretty interesting right now. Bitcoin was selling off big time last night. The sell-off actually started yesterday afternoon. It coincided with some of those tariff announcements, and then the sell-off continued. It actually accelerated at around 4 o'clock in the afternoon Eastern time yesterday. I think that coincided with those Amazon earnings disappointments. And so we actually saw Bitcoin go as low as 114,000 overnight. Now it's bounced a little bit, 115,800. Now let's look at like 1 minute candles here. This is pretty interesting because Bitcoin was selling off all night. Now it's bounced a little bit. Look at what Bitcoin did at 8:30. Bitcoin actually started rallying at 8:30 on that jobs number. I'll be honest, guys, I don't get it. All right. Bitcoin was acting like a risk off, right? It was behaving like a risk asset all morning. It was selling off on the tariff news. It was selling off on the bad Amazon earnings. All of a sudden, we get a really bad jobs report and Bitcoin starts rallying. Bitcoin is now rallying almost like a safe haven asset during times of turmoil. I don't really get that. Now, it's still down on the day, right? Down versus where we were yesterday. I suspect Bitcoin is rallying because people are worried about the Fed's dovish monetary policy, maybe a little bit of dollar debasement, and so they're moving into Bitcoin. But we're seeing Bitcoin have a little bit of an identity crisis here. Some days it behaves like a risk asset and it sells off along with stocks. Sometimes it behaves like a safe haven and people run to it during times of turmoil. Bitcoin, make up your mind. Figure out what you want to be. Let the rest of us know. All right, now let's get into this jobs number, guys. Again, really bad report. Here's the actual release here from the Bureau of Labor Statistics. Total non-farm employment changed little in July, up by 73,000, and has shown little change since April, the US BLS reported today. And that little change since April is a way they casually throw in the first sentence. By the way, we just got rid of all the job market gains from the last 2 months. The unemployment rate at 4.2%, that's up slightly, but little change from July. We'll look at that chart. Employment continued to trend up in healthcare and social assistance, not signs of prosperity for the economy, and the federal government continued to lose jobs. Those are the sectors that are actually seeing movements. But again, the big story today is all the way down towards the bottom of the report. Revisions for May and June were larger than normal. The change in total non-farm payroll employment for May was revised down by 125,000 from 144K to 19K. Sorry, a slight margin of error there. And the change for June was revised down by 133,000 from 147K to just 14,000. I take back everything I said last month about the good jobs report. They just revised it all away. With these revisions, employment in May and June combined is 258,000 lower than previously reported. And guys, if we take that 258,000 in downwardly revisions, let's subtract the 73,000 that the market said they added. We've got a net loss of 185,000 jobs for the month of July. This report sucks. But wait, there's more. Table A9. I always open up this table when we go through the job reports. Now, this is the household data. All right, the number that we reported earlier, right, the headline number, that 73,000 added, plus those big downwardly revisions, that's the establishment survey. That's when they asked businesses, how many jobs did you add? How many people did you lay off? There's 2 surveys in the jobs report. That's the establishment survey, but this is the household data that we're looking at now. The household data calls up people and says, who's working, what kind of job you working, where you working, that kind of stuff. All right. Now, the survey that counts people has some interesting things to tell us this morning as well. In particular, we're looking at full-time workers seasonally adjusted. These 2 numbers here, this guy right here, there's your number from June, and here's your number from July. 134,837,000 full-time employees in the United States last month. That is a loss of 440,000 full-time jobs. We've been seeing this for like 2-3 years now, guys. The full-time jobs are going away. The well-paying jobs with all their benefits and all their paid time off, they're just going away. And what are they being replaced with? Part-time jobs. Part-time workers in the United States. We went from 28,190,000 to 28,437,000. That is a gain of 247,000 people. So we had close to 500,000 people lost full-time jobs. but about half of them managed to find part-time work to offset that. Again, the job market, when you really peel back and look under the hood, guys, it's really bad here. All right, replacing good full-time jobs with lousy part-time jobs. Another interesting thing, I've been saying this for years, we've been observing a rise of multiple job holders. And pretty much all last year, I always said, like, as we're watching more and more people get second jobs to make ends meet because of inflation and the cost of living, I've been saying, hey, at least these people are able to find a second job. I mean, that's the silver lining here. It sucks. You got to do a second job at night. You should be with your kids enjoying your life, but instead you got to go to your other job because everything got so expensive. But at the very least, at least you have that option. Well, not this month. Multiple job holders in the United States decreased by 523,000 people. 500,000 people lost their second job last month. That doesn't show up elsewhere in the jobs report. This is why it's so important to look. And last but not least, self-employed unincorporated. All right. Now, this is gig work, and it also includes things like farm workers, commercial fishermen, or self-employed unincorporated. That one actually declined by 62,000 last month as well. Now, I'm not really sure how to explain the drop in gig work. It's possible that deportations are showing up here, right? A lot of temporary labor that works on farms. That tends to be the people that ICE is targeting right now. Possible that explains the big drop that we saw there. I haven't heard anything about Uber drivers losing their jobs or getting laid off. Maybe they're just quitting because they're not making money. That's also possible. But either way, guys, this jobs report, I mean, there's just nothing to like in here. There's really no good news in the report. The unemployment rate ticked up to 4.2% from 4.1%. Again, not good data. And even unemployed, guys, that doesn't really do it justice because the unemployment rate doesn't capture people who are underemployed, people who are working part-time jobs after losing a full-time job. They still show up the same on the unemployment rate. So this number should arguably be higher than it really is. And last but not least, labor force participation rate. That one dropped as well, 62.2%. That's down from 62.3. Probably the reason why the unemployment rate didn't go up further is because a lot of people just gave up and stopped looking for work, stopped trying to work. And when that happens, the labor force participation rate drops, but the unemployment rate does not. And by the way, look at the labor force participation rate. Let's look at a 10-year chart of that. Labor force participation rate dropped off a cliff after COVID, and then it increased and it recovered during the recovery. But you may notice now it's been dropping steadily pretty much since the middle of August, since 2023. And now it's dropping a little bit faster. That's starting to accelerate to the downside. People are giving up. People are also aging out of the workforce, but I think a lot of that is also just people giving up. And last but not least, the Fed Watch tool heading higher. All right. Odds of a September rate cut are now, let's refresh this and get an accurate print. Odds of a rate cut in September are now 75.5%. Guys, this was 39% yesterday. So the likelihood of a rate cut in September have almost doubled just off of this jobs report. You think Jerome's got a little egg on his face this morning? You think maybe? Yeah, I think so. Just a little bit. All right, so that's just the jobs report. There's all this other stuff going on this morning. Trump hits dozens more countries with steep tariffs. The market was already selling off on this news. That's before that jobs report hit. U.S. President Donald Trump imposed steep tariffs on exports from dozens of trading partners, including Canada, Brazil, India, and Taiwan, ahead of a Friday trade deal deadline, pressing ahead with plans to reorder the global economy. Trump set rates, including a 35% duty on many goods from Canada, 50% from Brazil, 25% from India, 20% for Taiwan, and 39% for Switzerland, according to a presidential executive order. The order listed higher import duty rates of 10% to 41% starting in 7 days for 69 trading partners as of 12:01 a.m. Eastern Time. Deadline approached. So that's the other thing, guys. These rates kick in a week from now. There was no taco, at least not yet, not this time around. Some of them had reached tariff-reducing deals, while others had no opportunity to negotiate. Trump included an exception for some goods shipped within the coming week. Also add some details here. Trump issued a separate order for Canada that raises the rate on Canadian goods subject to fentanyl-related tariffs up to 35% from 25% previously, saying Canada had failed to cooperate in curbing illicit narcotics flows into the U.S. The higher tariffs on Canadian goods contrasted sharply with Trump's decision to grant Mexico a 90-day reprieve from higher tariffs of 30% on many goods to allow time to negotiate a broader trade pact. By the way, there are some charts going around here, guys, like this chart here showing in gray what the initial tariff rate was on Liberation Day, or what some of the highest threatened rates were, and then in red showing what the new tariff rates are. Most of them went down. That was Trump giving the bond market a little bit of what it wanted. The bond market threw a fit after Liberation Day, you guys may recall. So most of these rates have gone down, but there were some exceptions. Switzerland went from about 31% up to 39%. We haven't heard a lot about Switzerland. I don't know what's going on there. Maybe it's got something to do with the Swiss franc. Honestly, I couldn't tell you. Turkey went from 10% up to 15%. Who else rose? There was a few other countries saw increases. Not many, though. Most countries saw their tariff rates drop. So the market was already digesting that yesterday. And then we got Amazon earnings. Amazon falls as profit outlook and cloud growth spook investors. This one hit yesterday after the close. Amazon dropped in pre-market trading after projecting weaker than expected operating income and trailing the sales growth of its cloud rivals, leaving investors searching for signs that the company's huge investments in artificial intelligence are paying off. Operating profit will be $15.5 billion to $20.5 billion in the period ending September. That's compared with an average estimate for $19.4 billion. Sales will be $174 to $179.5 billion, the company said. Analysts had expected $173. So, the numbers weren't terrible. The problem, though, was AWS. Chief Executive Andy Jassy engaged in an AI infrastructure arms race with Microsoft and Alphabet that requires heavy spending on data centers. Both of those rivals earlier reported strong earnings, showing they are benefiting from the AI boom. Amazon spent a record $31.4 billion in capex in the quarter, up about 90% from the same period a year earlier. CFO Brian Olszewski said the spending would be reasonably representative of what the company plans for the second half of the year. In the second quarter, revenue jumped 13% to $166.7 billion. That handily beat estimates. Again, it was a big beat for revenue, but Amazon Web Services, the largest seller of rented computing power, gained a little more than 17% to $30.9 billion, just ahead of analysts' average estimates of $30.8 billion. Now, that's the revenue, guys. The other important thing is that their margins got clobbered. The AWS sales increase was very disappointing, given the higher growth rates reported by Microsoft and Google, said Gil Luria, an analyst at D.A. Davidson, also a former guest on this channel. Microsoft's Azure posted a 39% rise in sales during the 3 months ended June. Google Cloud revenue rose 32%. So AWS is seeing just 17% growth, and also their margins, operating margins for AWS were just 32.9%, down sharply from 39.5% last quarter. Jassy was pressed by analysts on a conference call after the results about why AWS wasn't growing as fast as rivals in the face of staggering demand to feed AI workloads. There is a Wall Street finance person narrative right now that AWS is falling behind, Brian Nowak, an analyst at Morgan Stanley, said on the call. Amazon CEO said it was very early days in artificial intelligence and that the company's efforts to lower the cost of running AI applications would draw more customers over time. He repeated his view that it will take time to build sufficient capacity to meet customers' needs. Finding enough electricity to power data centers is the biggest constraint to expanding cloud services, he added. And guys, that last sentence is so important. Finding enough electricity to power data centers is the biggest constraint. Not how many chips I can buy from NVIDIA. All right. That is now two of the big CEOs in big tech have now said this thing, that they are power constrained, not chip constrained. That doesn't necessarily mean NVIDIA is going to miss earnings. I'm sure NVIDIA is going to blow out their numbers and Jensen Huang is going to make his stupid statements about insane demand. He's going to sound just like Crazy Eddie. Maybe he might sign a few more boobs. Who knows? But look, guys, they are out building the power grid. That will catch up to them. Sooner or later, physics gets a vote. I'm sorry to interrupt your bubble and your zero DTE call option buying bonanza, you degenerate gamblers. But sooner or later, guys, these birds are coming home to roost. Everybody's power bill is already starting to go up. And now you got the CEO of the biggest player in the space, Amazon Web Services, saying he can't power these things. So what's that mean? How's he going to keep buying Blackwells if there's no power? Is he going to unplug his H100s in order to plug in his B200s? Well, if he does that, he's going to have to depreciate those H100s fully, not the 6-year straight line depreciation most of them are using. Again, there is a reckoning coming in this space. It may not get here today or tomorrow, but it's coming. Amazon stock down 7.6%. Let's refresh this one. 7.5%. The opening bell has rung $217.08. That's off by $17. Meanwhile, Apple actually pretty good. Apple's trying to come back fueled by Mac sales and iPhone upgrades. Apple posted pretty good earnings here. They posted their first sales growth in China in 2 years, saying the new Mac computers and demand for city-dwelling phone customers helped fuel the rebound. Revenue from Greater China gained 4.4% to $15.4 billion in June quarter. Apple reported, beating the average Wall Street estimate of $15.2 billion. The results followed 7 straight quarters of declining sales in the region, which was once a reliable growth engine for Apple. Consumers snapped up the MacBook Air, Mac Mini, and MacBook Pro, fueling double-digit growth from that business in China. The MacBook Air was the top-selling laptop in the country, and the Mac Mini was the best-selling desktop model, CEO Tim Cook said on the conference call. Government subsidies may have had an effect, Cook said. China has been offering incentives to buyers of smartphones and other electronics this year. The iPhone upgraders in mainland China set a record for the June quarter. iPhone had the top 3 models in urban China, which is extraordinary. Apple's overall share of the Chinese phone industry still slipped last quarter, according to research firm IDC, though. The company's unit shipments declined 1.3% in the period, though that was better than the overall market's 4% drop. So pretty good quarter for Apple, helped by stimmies in China. China's economy is collapsing because of their real estate market, and so they're trying to spur consumer demand by giving everybody helicopter money. And a lot of them are spending it on Apple products. That stock. Let's refresh this because the opening bell has rung. Apple is up 2%, $211.84. That's up by about $4. We also got big oil earnings this morning. ExxonMobil and Chevron say oil production is booming and they are rolling in cash. Shares of both oil giants Exxon and Chevron rose in early Friday trading as they reported second quarter profit and free cash flow that beat expectations as production rose to historic levels. Chevron said worldwide U.S. net oil equivalent production set quarterly records as production from an affiliate that I definitely can't pronounce jumped by 34%, and Gulf of America production rose 22%, while production in the Permian Basin increased by 14% to 1 million barrels of oil equivalent per day. Exxon said it achieved the highest second quarter production since they merged 25 years ago with Mobil. Production was 4.6 million barrels of oil per day equivalent, including 1.6 million BOE per day in the Permian. That helped both companies report free cash flow that was well above expectations, which should please investors banking on shareholder returns. Wow, free cash flow going up for a change. Well, it's very unlike big tech. Oh, but you know what? This market, I forgot. This market doesn't care about making money. So ExxonMobil's free cash flow up 19% year over year. No, that stock is down 1.2%. Why invest in companies that actually make money and have bank accounts going up when you can invest in Ponzi schemes? Apparently, that's what the market is telling us this morning. Exxon stock down 1%. Chevron, meanwhile, doing a little bit better. Their free cash flow increased dramatically. Keep in mind, Chevron just merged with Hess as well. That stock is up 1.04%, $153.38, up about $1.75. And we got another big one this morning. Where is it? Here we go. Figma shares jump 250% in their stock market debut. This thing went wild yesterday. Now, Figma, it's not a company I'm particularly familiar with, but this market has been starved for an IPO, any IPO, for a while now. And when they finally get one, they buy the thing like crazy. Who cares what the company is? If they make any money, just buy the new stock. That seems to be the thing now. Shares of software company Figma soared in their stock market debut Thursday, rising 250% in one of the splashiest IPOs in years. The stock opened at $85 a share, more than twice its IPO price, and the best first day showing in recent memory for a major offering. The stock was paused temporarily for volatility shortly after it began trading. Shares closed at $115.50, more than triple the company's IPO price giving it a market value close to $70 billion. Figma makes collaborative tools for building apps or websites, which are used by companies including Airbnb, Uber, and Netflix. Basically, every little startup we back is built with Figma, said Andrew Reed, a partner at Sequoia, who sits on Figma's board of directors. The California company was founded in 2012 by two friends who met at Brown University. It started laying the groundwork for an IPO after Adobe walked away from a 2022 deal to acquire it after regulatory pushback. The deal would have valued Figma at $20 billion. Figma posted revenue of $749 million last year, up nearly 50% from the previous year, according to regulatory filings, although the company posted a net loss in 2024 that it blamed on employee stock compensation costs. And that share-based compensation not really affecting Figma, up 250% on their IPO day. Let's see what they're doing this morning, up another 8% this morning, $126.15. Yeah, that's a pretty good IPO. When your stock triples on its first day of trading, I'd say you did something right. And I just want to say thank you very much to Mr. ND22121, you binary NDU. Could you please explain private credit again? I know what they're trying to do now with 401k, but forget what it is. As always, outstanding work. All right, guys, private credit are basically loans from companies that are not banks that are acting like banks. All right. We passed this law after the GFC that said, you know what, the banks took too much risk and we had to bail out the banks. No more too big to fail. We're not going to do bailouts anymore. So we passed all these restrictions on how much loans to risky companies the banks were allowed to make. And so hedge funds and private equity firms and other financial non-banks, if you will, sometimes they're called shadow banks, looked over at the banks and said, wow, they can't lend to all these people who can't make the money or can't pay the money back. Why don't we do it? And so you've got hedge funds, you've got other asset managers acting like banks. They're like, yeah, we're not a bank, but we could be a bank. How hard could it be? It's actually incredibly hard when you look at it. And so they started making loans to all these zombie companies to keep them alive because the government said the banks weren't allowed to. And so they loaned all their money. And then they're like, wow, we're out of money. We need even more money to make these loans, these private loans, private credit to these companies. And so what do these non-banks do? They go to the banks and they say, yo, loan us a few $billion, and then we're going to loan those few billions to all the people that you're not allowed to loan to. And they look at the regulators and they're like, yup, totally legal. Thanks for the regulations. And of course, the banks are like, sure, we're not allowed to loan to them, but we can loan to you first, and then you can loan to them. There's nothing in the law that says we can't use middlemen to make the same risky loans. And so private credit sprang up as an industry. It went from next to nothing to trillions of dollars. And now all these loans, they're not getting paid back because they're loans to risky borrowers. And when the economy starts to suffer, the loans don't get paid back. And so there is a mountain of losses about to be realized by all of these non-banks who borrowed money from banks. And they're like, well, crap, what do we do with it? Quick, sell it to grandma's 401k, sell it to the pension funds, get it off of our books. And we'll just tell everybody we're democratizing access, saying we're going to let you invest in this. Oh, you let you get in on the ground floor. Nope. It's a bag of flaming dog shit that they need to get off their books, and they're trying to park it in people's people's retirement accounts. That's what's going on with private credit. It's basically loans from non-banks to companies that can't pay it back. That's what it is. And we learned nothing from the GFC. Thank you, ND22121. Appreciate the support of the channel. Thank you, M&J, who's saying more voiceover charting. Voiceover charting, huh? Whose voice are we using? Are we using Sean Connery's voice for our charting today? Yes, stock in Amazon is down 7% because AWS doesn't make any money. Oh, they forgot their free cash flow was down 66% year over year. I know a little something about artificial intelligence, or at least intelligence. I was previously served in Her Majesty's Intelligence Service. There's your voiceover charting, Sean Connery weighing in on AWS and their disappointing numbers. Thank you very much, M&J, for supporting the channel, for everything you do as a channel. You're awesome. Thank you for being a melonhead for 17 months. Snowman1201, he says, happy Friday, Jack. Thank you so much, Snowman. Happy Friday. Happy Jobs Day. Happy August. Oh, my God, the summer is almost over. What happened? The dog days are here. Thank you for the good vibes this morning, Snowman, and for supporting the channel. M&J is back again saying, anyone remember the SNL skit Lowered Expectations? I don't remember that skit. You know, I've watched a lot of SNL. I don't watch the new ones anymore. It just doesn't do it for me. I got to go back and watch that one, to be honest with you. But generally, I find in life, the key to happiness is high hopes and low expectations. So keep your hopes high and your expectations low. You'll rarely be disappointed. It's the best I can do. I haven't seen the skit, but I'm going to go check that one out just as soon as this stream is over. Thank you again, M&J, for being so awesome and for supporting the channel. Robert feeds the machine saying stimulus. What stimulus? Is this the Chinese stimulus that's inflating Apple earnings? By the way, I bet that really chaps some communist party's butt, doesn't it? You know, oh yeah, we're printing all this money and pumping it into the system to try to stimulate consumption, and all the money's going to an American company, right? As the Americans put tariffs on us. I'm sure that bugs somebody. They're probably going to put a carve out in the stimulus that says you can only spend it on products made in China or made by Chinese companies. iPhones are made in China still. But yeah, that stimulus. And then there's also the stimulus of the Fed is probably going to start cutting. And when the cuts aren't enough, the Fed is going to start printing gold. That's all I can tell you guys. There's just not enough gold in the world for what's coming. They're all going to print. Thank you, Robert, for feeding the machine once again this morning. Chris Bott, what's going on, Chris? He says, have you done your Dark Helmet Yellen impression yet? Dark Helmet Yellen. Okay. I don't know how to do. And I'm trying to think, like half the jokes in Spaceballs will get my channel booted for life. How do you do this? A cross between Rick Moranis and Janet Yellen. I mean, they're virtually identical. It's like Janet Yellen does look like Rick Moranis with Craig. Lone Star. I am your father. Why? Because that kind of surgery can be done over the weekend these days. No. Let's see. Planet Spaceball. We want their oxygen. And, you know, we parked our spaceship. We had Princess Vespa. She was being held captive and her father gave up the code. And as soon as we got the code, I had to change the code on my luggage because it was the same strikingly. Geez, you know, I don't know, man. You're like, you got to give me some warning. I need some time to write this stuff. I can't just do Dark Helmet Yelling all of a sudden. Trust me, my Schwartz is bigger than yours. You'll just have to take my word for it. All right, there we go. Dark Helmet and Janet Yellen. Gosh, you guys just bouncing them off the walls here. Let's see what sticks. Correction, Mad TV skit. Well, thank you, M&J. It was a Mad TV skit. I actually like Mad TV. Some of it I liked. I like it more than I like modern SNL, that's for sure. Lowered Expectations. I'm going to go check that one out, M&J. It's the best I can offer you right now. I just haven't seen it. Guys, it's been a rough morning. It's going to be a rough day. Terrible jobs report. Hey, thank you so much to my Patreon supporters and my magnanimous melonheads on YouTube. We're going to talk more about this jobs number and more about what it means for the economy on our weekly Zoom get-together at 2 p.m. Eastern Time today, as we do every week. Links down below to that stuff should you feel so inclined. Thank you guys so much for all the super chats and for supporting the channel as well. Hey, don't forget that like button and that subscribe button on the way out for the algorithm. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.